Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, September 8th. Hope you guys had a wonderful Labor Day weekend. Hopefully you guys got some rest, enjoyed yourselves, and started off with a nice short week this week. Today we got one item here on the economic calendar, and that is the NFIB Small Business Index. This is an index that kind of gauges the confidence level for small businesses, which are important primarily because they do make up the bulk of the employment data out there for U.S. jobs. So on the index in July rather was 98.8, and then it did increase a little bit in August. So things are getting a little bit better. They're feeling a little bit more comfortable, which is important because we obviously we got high unemployment rate right now with the pandemic lockdowns, which basically eliminated a lot of jobs. We're hoping to be able to increase that and bring people back to work here. So let's go ahead and take a look, see what's going on in the headline news. Right now, again, stocks are taking a little bit of a beating right now. Again, it's kind of following the trend. It's going through a little bit of a correction. Some investors are going through some rebalancing. We'll probably see that at some point. Kind of level itself off at some point here, but when, we don't know exactly when. Probably still want to see more data to determine that. But part of it is we had some comments over the weekend from President Trump. Of course, China had replied. They basically he indicated over the weekend that we're trying to become less reliant on China, that we need to be reliant on ourselves, so that we're going to try to bring back more of the manufacturing jobs to the U.S. so we're not reliant on China. And of course, China's reply basically is that they want to become less reliant on the U.S., like, for example, which is affecting the big tech firms out there, so they're going to maybe try to create their own processors, stuff like that, and microchips versus relying on the U.S. companies. So, of course, that the big tech are the ones that are suffering a little bit further because they're going to be more directly related to China, issues with China, than maybe most industries. Also, we had a vaccine update where basically the big pharmas, CEOs got together and gave a big pledge that they vow that when they release them, that they will be safe and ready for the consumer. Just kind of a vote of confidence that's out there. All right, so let's go ahead and take a look, see what's going on in the bond market, and see what mortgage rates are doing. Mortgage rates we're doing much better this morning. We were up about 20 basis points. We were just past that 25-day moving average. So on East Coast, a lot of lenders probably priced for the better. But as we progress later on and reach at time where a lot of the West Coast will be starting to get their pricing out, we pull back. So we're probably going to be very similar to what we saw on last Friday's pricing. They might be slightly better depending on when they came out with their pricing today, but they may be about the same as where we currently reside right now, as we just kind of pull below this 25-day moving average again in case we go negative, though, or typically on the more conservative side. So that's been kind of the trend as we were way up here. This is about 20 basis points, and we've kind of pulled back, and now we're only up 9 basis points from where we left off on Friday. So let's see how this is playing on yields. Yields are kind of doing the same. We're approaching the 100-day moving average here. We've resided a little bit, kind of increased a little bit, because that was a pretty big day on Friday. As you could see here for yields, went way up there from about the 62, 65 range all the way up to like 70, probably around 72 range here. Right now, we're just under 0.68 on the yields, and it has pulled back a little bit. So we'll see if this was a floor, now it becomes ceiling, if it falls back and becomes a ceiling for yields to keep it in a tighter range here. All right, so mortgage rates, again, depending on where you're at, it could be a little bit better if you're on the East Coast, which may be inclined to going for a reprice for the worse. Here on the West Coast, lenders will be more inclined to keep pricing more similar to what we found on Friday. Maybe some slight improvement, but depending on the lender, they might most likely will err to the conservative side of just pulling back a little bit and just not and keep pricing to what we saw more likely on Friday as of right now. All right, stay tuned if you guys are in the market looking to refinance or buy. If you want more information about the process or different loan programs, different things like that, I'll leave a link to a website if you want to reach out to me. My information will be on that website as well, so feel free to reach out. I am a loan officer, so we can certainly help you out with your pre-approvals on purchases and financing and buying the next property. to which we have a wide variety of programs. The company I work with is a national company, so we do cover 48 of the U.S. states and can handle most situations here. So please feel free to reach out and connect. And if you don't see it at the end of the video, it'll be in the description as well, so that we have in both locations. Have a great rest of your day. Thanks so much for watching, and see you in tomorrow's video. Bye-bye.